Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open a new Webull brokerage account, put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out the brokerage app. All you got to do, guys, is click on that link down in the description box of this video. Open up that Webull account. Go get that free stock. Go get that free money. If you send me a DM on Instagram at RichardFain28, I'm going to send you a free Webull tutorial video to walk you through how to use the Webull app to make your first trade. Now, it's important that you put money in the Webull account. So when you DM me on Instagram, you got to make sure you already have opened the Webull account and funded it. You can't invest in paper assets if you have no money in your brokerage account. But if you do have money in the brokerage account, send me that DM. I'm going to send you that Webull tutorial video so that you can start building wealth immediately. Guys, this week has been really crazy in the stock market. Y'all know I'm a huge investor in paper assets. And right now, paper assets are tanking. They are losing value extremely fast. I looked at the three major indexes, the Dow, the S&P 500, and the NASDAQ. They are all bloody red. And guys, when they're bloody red, a lot of people, including myself, are concerned. Am I losing all of my wealth? Should I sell it all? Sell it all right now. Get out of it. Cut my losses. And wait. Move it to safety. Move it to my high yield money market until things settle down. That's what I'm thinking. That's what a lot of folks are thinking. I don't want to lose all of my gains. And guess what else? The mainstream media, the 1%, are even pouring gasoline on the fire. Every major news network are telling people a catastrophe is coming. The apocalypse is coming. Run for shelter. Move your money out of the market and put it in safety. That's what you hear. The question is that what you're going to do? Here's where I look at it. If I'm in the building stage of wealth, does this present an opportunity to build wealth? You have to answer that question. If I'm in the enjoyment stage of wealth, is there an opportunity to move my money out of these declining assets and move it to safety? Maybe a U.S. Treasury, maybe to a CD, maybe to a high yield money market until this thing blows over. That's a question you have to answer. All I can do is tell you what I'm going to do. Because I consider myself in the building stage of wealth, but I also consider myself in the enjoyment stage of wealth. Let me explain. I have a certain level of wealth I've already accumulated that's in the stock market. 75% of my wealth is in the stock market, guys. But on the other hand, I'm still building wealth. So should I leave that money in or should I take it out? Should I liquidate all of my investments right now and move that money to safety? We're talking about a bunch of money. We're talking about my nest egg. But here's what I'm going to be doing. I'm not moving one investment. I'm leaving everything where it's at. And what I'm also going to continue doing is doubling down on my present investment allocation and my future investment allocations. Some of you may say, well, hey man, why would you do that when the market is tanking? You've already built a level of wealth. Why would you risk that wealth? Well, I've been investing in the stock market for over 25 years on my own. So I've seen a lot of stock market cycles. I've seen bear markets. I've seen bull markets. I've been through them all, guys. And one thing I know about the stock market and paper assets, if you're buying blue chip paper assets, blue chip individual stocks, blue chip ETFs, blue chip index funds, one thing I've learned over 25 years, they always go back and trade at a premium at some point. Now, I don't know if that's going to be in 2 months or that's going to be in 2 years. I don't know. And it's a risk. It's a risk that I'm taking. I'm taking a huge risk. 75% of my net worth is in the stock market, in ETFs and index funds and some individual stocks. And I can see my net worth declining. But that's still not enough for me to abandon my investment strategy that has worked for me for 25 years. Now, I can't tell you what to do. You have to feel comfortable with the decision that you are making. I can't tell you what to do with your nest egg. I can't tell you when it's time for you to cut your losses and get out of the market. I can't tell you that. I'm not your financial advisor. And even if I was a financial advisor, I wouldn't tell you what to do. You have to make a decision. The decision that I'm making for myself is based on historical data. When I'm buying VOO, which is Vanguard's S&P 500 ETF that tracks the S&P 500 index. See, I know VOO right now is on sale because I've seen VOO over the last year and a half go up to $460 a share. So if I can buy it below $400 a share, if I can buy it below $350 a share, if I can buy it below $300 a share, I'm winning because I know the precedent has already been set for it. It's already been set. History tells me it's a $460 per share ETF per share. All I gotta do is be patient, continue buying, continue dollar cost averaging in. Also, what I've learned over 25 years is I gotta be able to buy assets, really good assets at a discount. That's the only way I build my net worth. See, if I can buy VOO at $400 a share, and I consistently do that, let's say this month I buy it at $400 a share. Next month, it's trading at $350 a share. I buy it again. Over the next 2, 3, 5 years, I believe my average cost per share is going to be below $400. But when I eventually roll out of it or rotate out of VOO, maybe it's trading at $500 a share. Maybe it's trading at $550 a share. See, that's how you build wealth, guys. You got to buy these assets. I'm talking about good assets. I'm not talking about just ordinary run-of-the-mill assets. I'm talking about the very best of the best. You buy these assets and you got to hold them. You got to have some risk tolerance if you're going to be in the market. You got to have some risk tolerance if you're going to buy real estate. You're going to have some risk tolerance if you want to start a business. There is no reward without risk. Everybody talk about they want to get rich. Everybody talk about they want to build wealth. Everybody talk about they want to get the freedom, but don't nobody want to pay the financial price to get there. Nobody wants to pay the price. You got to pay the price. Paying the price is being able to buy these investments. You got to be able to discipline yourself to buy them when they're on sale. See, the 1% want you to sell your investments when you really should be buying investments. They want you to buy investments when you really should be selling them. Right now, in my opinion, at least for me in my investment strategy, right now is not the right time to sell them. I don't care what the stock market is doing. I don't care what the 1% pump into their propaganda machine called the media. They're not going to pump enough fear into their propaganda machine to get me to a point where I'm ready to liquidate and sell my investments. I'm not doing it. Because I've done this for a long time and I've seen the 1% manipulate the 99%. And that's what's happening right now. Now, I'm not telling you guys not to sell your investments. You do whatever you want to do. It's your financial freedom. It's not mine. I'm just telling you in my financial freedom plan, I'm buying more. I hope it continues to go down. I hope VOO gets to $300 a share or below, because if it does, I'm all in. Because I know within a couple years it's going to be over 400 again. Why? Because history tells me that. History tells me it increases in value. Why? Because it's the top 500 companies in America. At some point, the top 500 companies in America will grow again. They have to. Because if they don't, we don't have an economy. If they don't, we don't have a financial system. They're going to grow again at some point. I don't have a crystal ball. I can't tell you when they're going to grow. All I can do is continue to buy. I'm just going to continue to buy. Like I've done for 25 years. Same thing in 2008. Oh, the world's coming to an end. The financial markets will never be the same again. That's the 1% pumping this fear into a propaganda machine, which is the media. And people fell for it. A lot of people fell for it. Sold all their investments prematurely, cashed out, and then all of a sudden, 10 years later, 15 years later, they're still licking their wounds because they regret selling their investments too early. Now, again, you sell whenever you want to sell. That's your business. I can't tell you when to sell your investments, guys. I can tell you what I'm going to do with mine. I'm going to continue to buy. Selling everything now is not an option for me in my strategy for building wealth. My strategy for building wealth is when everybody is fearful, I'm going to be greedy. When everybody is greedy, I'm going to be fearful. That's a little quote from Warren Buffett, one of the richest people in the world. Be fearful when everybody is greedy, and be greedy when everybody is fearful. So what does that mean? Everybody is fearful right now. So smart investors do what? They get greedy. See, when there's panic and chaos and war conflicts around the world, that's when I want to buy my investments. But I only want to buy the very best blue chip ETFs, the very best blue chip index funds, and the very best blue chip individual stocks. Those are my three buckets when it comes to paper assets. And I'm going to double down every time there's fear and panic and chaos and war conflicts. Every time that happens, I'm going to buy. Because I believe that will pass. That's what history tells me. History tells me that will pass. And when it does, I'm going to have all of these assets that I bought at a tremendous discount. And they're going to trade at a premium again. And that's where I build my net worth. So I'm hoping VOO, VGT, I'm hoping they go down to under $300 a share. Because the last time I bought VGT was September 2020. It was trading at $317 a share. You guys know what happened in March and April of 2020. March and April of 2020, the pandemic broke out. The stock market fell by 35%, just like that. Once again, 1% propaganda machine started spitting out fear. Sell everything. World's coming to an end. Don't let your life savings go down with this world. Take it out. Put it to safety. A lot of people did that and the market fell by 35%. What did I do? Back to what I said earlier. When people are fearful, time to be greedy. So what did I do? In September of 2020, I purchased Vanguard Information Technology, VGT, for $317 a share. I held it for 3 years and made over $100 per share. I made a $250,000 investment and cashed out with $350,000, $100,000. Why? Because I bought a very, 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 very good asset when it was discounted. Why? Because of fear. And I'm gonna do the same thing again. So I'm waiting, guys. All of my investments that I have right now in the stock market, they're fine. Why? Because I've been dollar cost averaging in forever. See, that's what I try to get you guys to understand. You got a dollar cost average in, so your average cost per share is lower. So when bad times come, it doesn't upset anything. What I do is when bad times comes, I just buy more at a discount. So when good times return, which they will, because they always do, give me one bear market that wasn't followed by a bull market in the history of the stock market. Last 100 years. Please tell me. Please give me one time there has been chaos, panic, and stressfulness financially in the markets, and it wasn't followed by a bull market. Please give me one time. Or better yet, let me ask you this. Give me one 10-year block in the history of the stock market. One 10-year span. One 10-year span where the market is traded negatively. One 10-year stretch of time. You ain't gonna be able to find it because it doesn't exist. Doesn't exist. So I'm getting all of these emails and these DMs this morning saying, what in the world's going on with the stock market? And again, guys, I'm no financial advisor. I'm not trying to tell anybody what to do with their money. I don't do that. I'm gonna tell you what I'm doing with mine. And then that's your job to figure out what you need to do with yours. But you better have a plan. You better have a strategy. You better understand what's happening. You better have a strategy and understand what is happening right now. And what is happening right now is that there are things happening in this country and around the world that's affecting our stock market. Because our stock market is just made up of companies. There's no magical potion or magical formula to the stock market. No, it's not. It's companies. And when companies do well, guess what? Their stock price does well. When their stock price does well, the stock market does well. When companies do bad, they can't borrow money cheaply. We got all this chaos in the world where people are not buying things the way they normally would in good times. Companies don't do as well. They're not as profitable. So you got to understand, most of these companies that operate in our economy and in our financial system, they have to borrow money to be profitable. They got to borrow cheap money. And right now they can't do that. Not with interest rates at 5.5%. Fed funds rate at 5%. Prime is at 8.5%. See, they can't borrow money cheaply, so they can't invest in growth. So a lot of these companies can't grow. They don't have the balance sheet. with a bunch of reserve cash like Apple does or Microsoft. No, most of these companies don't have that type of cash reserves. Their cash reserves is the market, the free market. But the free market is charging too much to lend them money. They can't borrow, so they can't grow. So their stock price falls. Then you got these war conflicts out there all around the world. People are at war. Even in the United States, I saw something last night on the news where another mass shooting, 22 people, maybe even more by this morning, killed. It's just crazy what's going on. But that does not negate the fact that I still got to build wealth. Despite all of that, I still got to build wealth and secure my financial future. I still got to figure out a way to multiply money. I cannot bury my head in the sand, scared to death, and miss all this opportunity. I won't do it. When people are fearful, that's when you should be greedy. That's Warren Buffett, guys. When people are greedy, that's when you should be fearful. And I invest using that philosophy. Now, I'm no Warren Buffett fanboy. I mean, he's a rich guy. But I do like that. I do like that investment mentality. Be fearful when people are greedy, and be greedy when people are fearful. You got to figure out what your strategy is, man. You can panic and sell all your investments or stop investing altogether, and you're not going to build your net worth. You're not. You build your net worth by buying assets at one price, a lower price, and then when those assets trade at a higher price, that's where you build your net worth. And then at that point, if you want to sell, then you sell. Why in the hell would I sell and lose money when I don't have to? So you shouldn't even be investing unless you got a long-term hold pattern, guys. Unless you got 3, 5, 7, 10-year hold pattern, why would you even be putting the money in the market? Why would you put the money in anything? Oh, I got the money for a year and I want to double it in a year. Listen, guys, don't put the money in the market. If you got to use that money, if it's earmarked for something within 12 months, why would you put it in the market? Don't put it in the market. Leave it under your mattress at home. Put it in a high-yield savings account at your local bank. Keep it wherever you keep it, but don't put it in the market because you're going to be sadly mistaken. This thing is volatile. This thing is unpredictable. But one thing I can tell you, one way, in my opinion, it's very predictable, is that over time, if you buy good assets and you buy them over time through dollar cost average and not try to time the market, history tells me you win. At least that's how it's been in my experience investing over 25 years. When I've done that, I've won. So you got to figure out what you're going to do. Are you going to sell it all and abandon your financial strategy and go bury your head in the sand and just be scared to death? Or are you going to say, okay, I understand what's happening. The market is volatile right now. There are a number of reasons why it's volatile. I'm not going into all that because I'm not an expert in all that. And I don't really care. I don't really care about all that. All I care about is, can I buy the very best ETFs and the very best index funds and the very best individual stocks at a discount today? And do they have a historical track record of multiplying money? That's all I care about. And if that's a yes, I buy. That's it. And at some point, I got to have in my head a target sell price. So if I can get VU at my target price, my target buy price, I buy it. And then I got to have in my head, in my filter system, I have a target sell price for VU. I'm going to give you just a quick example, a hypothetical. Let's say the world caved in and I could get VOO under $300 a share. Let's say I could get it at $2.99 a share. And I put 100K into that. Boom, I throw 100K into VOO at $2.99 a share. That was my target buy price, $2.99 a share. And I say to myself, in my filter system, I say, well, okay, $3.99 a share is gonna be my target sell price. That's what I do. I just keep dollar cost averaging in, keep dollar cost averaging in, and then boom, when it hits $3.99, I sell it all. That's investing, guys. It's that simple. Why we make it so complicated is because people have no idea why they're investing in most cases. Oh, I heard somebody on YouTube say I should invest. I heard someone on TikTok said I should do this. I heard somebody on Facebook or Instagram say I should do this, so I did it. I don't know why I'm doing it. I don't know. I thought I could put my $1,000 in and double it in 3 days. No, don't. See, unless you have a reason to invest, why would you even put your money in anything? Just keep it at your bank. You got to have a reason to invest, guys, because pain's coming. Financial pain is coming. Right now, we're in the middle of some financial pain. So if you ain't got a real clear-cut plan to get through this financial pain, you're going to sell your investments prematurely. Why? Because you're going to do exactly what the 1% propaganda machine want you to do. They want you to sell when you really should be buying. You got to understand that, guys. You got to have a plan. You got to have a game plan for all of this. You can't just be sitting out here listening to somebody online and you have no idea what you're trying to accomplish with your money. Don't invest if you don't have any idea what you're doing. And again, I'm not saying you need to be an expert because I'm not an expert. All I know is I know I want to build wealth. And I believe the stock market gives me an opportunity to do that, especially when things are discounted like they are this week. And maybe they will be next week. Maybe they will be in 2 months. Great. Keep on declining. The further they decline, the more wealth I build. See, you build your wealth on the red days. That's where, at least for me and my philosophy. Again, I'm no licensed financial advisor. I'm not a CFP. I'm not a Series 7. I'm not a 63. I'm not any of that stuff. But I don't need to be. I built my wealth anyways. Why? Because I know the fundamental things about buying assets. I buy low, sell high. Bam. Period. You can complicate it all you want. You can add all the little, complication on top of it all you want. It's that simple. You buy low, sell high. Period. I don't care what investment you invest in. If you buy it low and you sell it higher. I buy it at one price, I sell it at a higher price. I don't care if that higher price is $1 more than I paid for it. It's still a profit. That's investing, guys, 101. All this other fancy mumbo jumbo these people trying to get you to think about, that's all noise to confuse you. But if you ain't have a compelling reason for doing any of this, it don't make no sense for you to be investing. You got to have a compelling reason. You got to have a reason. You have to have a result you're trying to reach. You got to have a goal you're trying to hit. Like I said earlier about the scenario I gave you, I buy with a target price in mind that I'm going to buy. And then I have a target sale price that I'm going to sell. Just like I did with VOO when I bought it in September of 2020. I said, man, if I can get VOO under $320 a share, I'm buying. Not VOO, but VGT. If I can get VGT under $320 a share, I'm in. And that's what I did. And I put $250,000 in it. Boom, just like that. Got it for $317 a share, and I just waited. And of course, we had roller coaster. We had roller coasters. I mean, in December of 2021, the dang on thing went up to $460 a share, and I didn't sell. See, guys, I make mistakes too with investing. But I know one thing about investing. As long as it's a good investment and I stay in it long enough, I'm going to right size myself and I'm going to win. See, if I would have sold in December of 2021, I'd have made even more money in VGT. But I didn't. I got greedy. I was like, no, 2022 is going to be a monster year. It might go to $500. It might go to $550. It might go to $600. I got greedy. But what happened in 2022? The complete opposite. It fell back down to $300 a share. Actually, it fell under $300 a share in 2022. Why? Because I got greedy. See, I got greedy. But I said, no, I won't repeat that again. So what did I do? I didn't panic. I didn't sell it. I was like, doggone it. It is August of 2022 and VGT is trading under what I paid for it. I'm losing money right now. I didn't panic. I just stayed the course. And I said, you know something? This is a blue chip asset. It'll right size itself. You're going to make money in this thing. Why? Because history tells me you will. And guess what I did? I just stayed the course, man. I stayed the course. 2022 was horrible. I could have easily buried my head in the sand and sold at a loss and licked my wounds and, oh, I've never invested in the stock market again. I knew it was a scam. I could have easily did that, but I didn't. I didn't because I'm smarter than that. I'm smarter than that. I said to myself, this is a blue chip asset. At some point, this thing gonna bounce back in 2023. I believe it will. And if it don't, it'll bounce back in 2024. At some point, it's bouncing back. And guess what I did? I licked my wounds, stayed in the investment. 2022 was horrible. But guess what 2023 did? Woo! That thing went up to about $420, $425 a share. I cashed out and made $100 grand. Bam, just like that. Now, if I'd have sold in 2022, I'd have lost money. You gotta have a long-term outlook in this game, guys. I don't tell you that because I'm trying to brag. I tell you that because I'm human just like you. Hell, I done lost. You know something? The only thing saves me when I'm investing in the stock market is that I understand it's a long-term game. And I understand if it's blue chip and it has a historical track record of making money, it will return to that at some point. And I just stay in. A lot of folks, they panic. They sell. They let the 1% manipulate them. And they sell. And then now they're scared to death they'll never invest again. And guess what? You stay broke. Because the only way you get to financial freedom, you better have some assets that generate passive income. Ain't nobody gonna give you no assets. Most people are not gonna inherit wealth. Most people gonna have to get out there every single day, bust their butt and earn their wealth. Ain't nobody gonna give you no wealth. You think somebody gonna give you anything from the 1%? No, they ain't gonna give you a dime. They're gonna manipulate you and use you until they can't use you anymore. That's the way this country works when it comes to our financial system. If you know that and understand that, you have a chance to build wealth using the 1%'s own weapons. You don't have to be a 1%er, just use their weapons, their financial weapons that they use against you. You use it against them. That's what I do. I'm not a 1%er. I just use their financial weapons against them. That's all. And that's all I try to get you guys to understand on this channel is that you got to have a compelling reason for why you're doing all of this. If you don't, you will quit. You will lose money. You will not get to financial freedom. So you better have a compelling reason for doing what you're doing. Now, if you're already in the enjoyment stage of wealth, you've already built your wealth. You're not working anymore. You're not actively earning income. You're living off of your wealth. You're getting income from your wealth. I totally understand someone saying, hey, this is all I got. I'm moving this money over here because I'm scared. I get that. I'm 100% with you on that. But that's somebody who's already in the enjoyment stage of wealth. They've already built their wealth, and all they're trying to do is protect that wealth. Then I'm okay with you moving. Not I'm okay. I have no, that's on you, right? I get it though, because I do the same thing. Good thing for me is I'm in the enjoyment stage of wealth, but I'm also still in the building stage of wealth. But I also have a high income skill set where I make a bunch of money. So I don't have to lean on my investments to take care of me right now. So a little bit of temporary decline in my portfolio value doesn't bother me because I have a way to make money and I don't have to depend on my assets right now to generate cash for me. So I have the ability to take some more risks than the average person who's in the enjoyment stage of wealth who is not actively earning income like I am. So I get it if you want to move it because you're scared and it's your nest egg, move it. Don't worry about me, I'm cool. I'm not telling anybody not to move anything. What I'm telling you is know what your stage of building wealth you're in. If you're in the building stage of wealth, I don't know how you're going to build wealth if you're not in the market. If you're not buying real estate, if you're not buying paper assets, if you're not starting a business and multiplying money that way, I have no idea how you're going to build wealth. I have no idea. So if you're in the building stage of wealth, you better have some risk tolerance and you better take some type of risk on something or you're not going to build wealth. Let's not get it twisted. The only way you build wealth is by taking your active income and putting it in assets that multiply it for you. That's it, period. If you're not multiplying it through assets, then you're not building wealth. Yeah, you might have some money in the bank, but it ain't enough to generate. The bank, you ain't gonna generate no income in the bank with your money in the bank, number one. Not enough to take care of you now, unless you got millions and millions and millions and millions of dollars in there. But if you got a little $50,000 nest egg, you ain't gonna generate enough money at the bank on a monthly basis to take care of you. That's not gonna be enough passive income. It's not. So if you're comfortable with that, leave it right where it's at, right? Now, if you got $5 million in the bank and they're paying you a 5% money market or a 5% CD rate, that's enough money to generate on an annual basis to take care of you. But you're gonna need $3, $4, $5 million in order to do that, right? If you somebody that says, oh, I got 100K and I'm gonna leave it in my 5% CD at my local bank, guess what? That's only gonna generate you what? $5,000 a year? What's that? $600 a month? Now, maybe that's enough to take care of you. I don't know. Everybody got a different number. But in my situation, $600 a month wouldn't take care of me. I got to have a lot of money invested in order for it to generate enough income to take care of me with my lifestyle. So for me, it's all about building wealth, taking risks commensurate to what type of return I'm looking for. I'm not going to go out and take blind risks and put my money in stuff that has no historical track record just because my neighbor said it's a good investment. I'm not going to speculate that way. I'm only going to put my money in things that have a proven track record of building wealth, like the S&P 500, right? Like the total stock market, like certain sectors, right? Like the tech sector, healthcare. These are the things that I put my money in, guys, and I put my money in them for an effort to build wealth. That's what I plan on doing. I plan on building wealth, continuing to build wealth. This is a perfect time for me to build wealth when all of these assets are discounted. I hope they get discounted more, because if they do, I'm going to buy more. I hope and pray VGT and VOO get down to under $300 a share. I pray for it. Because if they do, ooh, goodness gracious, I'm going to make so much money. Because I'm just going to buy them up in bulk and just hold them for 2 to 3 years. And then they're going to go back to $400 a share at some point. They're going to go back to they may never get to $500 a share. Even though I think they will. Just say they don't. Let's say I can buy them at $300 a share. And they just get back to what they did in 2023. I'm going to be a rich man. That's how I look at it, guys. So when I see red, I see opportunity. Whereas a lot of folks see red and they see chaos and they see destruction. They see losing money. They see all the negative stuff that the 1% want you to see. Why? Because they want you to sell and they want you to stay on the sideline because that's when they're buying. See, all this chaos we see right now, I guarantee you the 1%, they're buying everything they can put their hands on. They're buying it. They're buying it because they know in 12 months, 18 months, 24 months, we're going to go back to a normal start of a bull market. And guess what's going to happen when that bull market hits? All of those assets that they bought at a discount shoot back up in value. And they're going to get wealthy again. They're going to keep adding to their wealth. That's why they want you to be fearful and on the sideline right now. Like I told you, Warren Buffett, one of the richest people in the world. Be fearful when people are greedy, and be greedy when people are fearful. Right now, people are fearful. As an investor, me personally, I'm going to be greedy. I'm going to buy. I want it to keep going down. Like I told y'all, please go down more. Right? I love when I see red right now when I'm in the building stage of wealth. I want to see red. When I get to the enjoyment stage of wealth, guess what? I'm going to take my money out of the stock market. I'm going to take a good portion of it out. I'm going to take 75% of my money out of the stock market when I get to a place where I need to live on that income. And I'm going to put it in something like U.S. Treasuries. I'm going to put it in other bonds. I'm going to put it in certificate of deposits at banks. Why at that point, if I get me 3-4% on several $1 million, it's enough for me to live. I don't know about you, but it's enough for me to live. I don't need no 20% return if I got $3 or $4 million. I don't need no 20% return on it. Not for me to live, I don't. You can give me a blended 5% return on $3 million. That's $150,000 a year. Listen, bro, that's more than enough money for me. Matter of fact, that's more than I need. So let's even back that down to, give me a 4% return on 3 mil. 4% return on 3 mil, man. It's $120,000 a year, man. Who can't live on $120,000 a year? A normal, regular, everyday person. Who can't live on that? Come on now. This is what I'm trying to tell y'all. And I'm not saying you need $3 million or any of that stuff. I'm just telling you, you need to find out what your number is and then multiply that by whatever rate of return you need to live. That's all you got to do, man. Listen, if you need $5,000 a year, $5,000 a month, when you get to your golden years for retirement, that's what you need. Then you just use the rule of 200, man. Take 200 times that 5,000. That's going to be $1 million. At a 6% rate of return, that is $60,000 a year divided by 12. That's $5,000 a month. So now as you start building your wealth, you know, hey, if I need $5,000 a month to live, I know I got to build my net worth to at least $1 million. If I can build my net worth to $1 million and I can get at least a 6% rate of return on that $1 million, that's going to generate $60,000 a year in income. Divide that by 12, guess what? Boom. There's my $5,000 a month in passive income. So all I got to do over the next 5 years, 10 years, 15 years is take my active income, put it in investments that are going to build it to $1 million in net worth, and then I'm in good shape in my golden years. That's it, man. But you got to have a strategy. You got to have an end game. You got to know exactly what you're trying to accomplish. That's the part about investing most people miss. They miss the part of, what am I actually trying to accomplish? Instead of, oh, I just want to have a bunch of money. Oh, I just want to live a great lifestyle. But you have no idea how much it's going to cost to live that great lifestyle. You got no idea. You got to have an idea. You got to have a reason for doing all of this. Or when the propaganda machine comes, guess what you're going to do? You're going to run and hide. You're going to sell all your investments. You go, oh, I got to sell them all. I'm going to lose everything. And the reason I know that, guys, is because I get the DMs. I get the DMs. I got them this morning. That's why I'm doing this video. Because I got the DMs on my Instagram page. People DMing me, oh, God, did you see what's going on with the market this week? Is it time to sell? Is it time to get out? And I'm like, guys, I'm not your financial advisor. That's not what I do. I don't tell people when to get out of the market. You got to get out when you feel like it's right to get out. That's why you need to have a plan. You need to know what you're trying to accomplish. Don't be just getting in because somebody told you to get in. You get in because you want to build wealth and multiply money, and you believe the stock market will give you the opportunity to do that, which I believe it does. It gives me the opportunity, and it has given a lot of people that opportunity over the last 100 years. Appreciate the super chat, Dope Law. Thank you, man. Appreciate you. Appreciate you very much. Thank you. Appreciate you. So all I'm telling you guys, the market does what the market does. It's done it for 100 years. The stock market has done this for 100 years. It has. This is nothing new. People act like this is new. Oh, I've never seen this before. Guys, it's just only done it for 100 years. That's all. Just for 100 years. Up and down for 100 years. That's what it does. But it's been up more times than it's been down. That's my opinion. That's my research. You go out and do your own homework. Go out and do your own research. Come up with your own conclusion. I'm not trying to convince you of anything here. I'm just telling you what I'm doing and what my philosophy is. If you rock with that philosophy, then rock with it. If you don't rock with it, that's on you. Do whatever you got to do. I'm doing what I need to do to build my wealth. And have done what I needed to do to build wealth. But I'm telling you, in my 25 years of experience, this is a tremendous opportunity to build wealth. You build wealth by buying assets at one price, and then they go up in value at a higher price, and you sell them. That's how you make money, guys. It's not, some trigonometry test. It's not advanced master's level trigonometry. It's pretty simple. You buy it at one price, hold it until it goes up to a higher price, and then you sell it. Now, when you sell it, that's up to you, and that's based on your financial strategy. That's based on your investment strategy. For me, I'm a long-term guy. I'm not going to need this money, God's will. I'm not going to need this money for 10 more years. I plan on working and doing what I do on the YouTube channel and building this media empire that I'm building. I plan on doing that for the next 10 years. So I plan on making a bunch of money doing that. But I'm going to take that money and I'm going to put it in the stock market. I'm going to take that money and I'm going to put it in the prime real estate fund that I'm starting. Y'all know I'm starting this real estate fund. It's called the Prime Real Estate Fund. I'm in the early stages of putting it together, forming it. And I've already gotten so much interest from you guys of joining me on that journey. So if you're interested, there's an email address in the description box of this video. Just send me an email and I'll give you more information on the Prime Real Estate Fund. It's coming along real well though. It's going to be tremendous, guys. It's going to be tremendous. And I can't wait till this thing rolls out in 2024. It's going to be a game changer for a lot of people. And the reason it's going to be a game changer is because a lot of people want to get into real estate, but they do not want to take on the day-to-day management of tenants and toilets. They don't. They want to have a part of their investments go into real estate, but they don't want to manage that real estate. They don't want to be responsible for the day-to-day. So you find a guy like me with 25 years of real estate experience, 25 years as a commercial real estate banker who understands real estate. I decide I'm going to start a fund and share that experience, share that opportunity with the people that follow me on social media. Now, whether people want to do that or not, that's on them. I'm just telling you what the concept is. We're going to buy real estate, 1 to 4 family dwellings, in the best locations we can afford. We're going to get cash flow and we're going to get capital appreciation. That's what we're going to be doing in the Prime Real Estate Fund. So if you want to be a part of that and you're showing some interest in it, send me an email and I'm going to put you on the interest list. So as soon as we formulate this thing, and it's coming, as soon as we formulate this thing, we're going to get the offering documents out. And at that point, if you feel like it's the right opportunity for you, jump in. And all a real estate fund is, in my opinion, it's just a pooling. It's just a pooling of money from investors to invest in real estate. Again, a lot of people want to be involved in real estate, but they don't necessarily want to manage the tenants and toilets. But they'd like to have a part of their money going into a real estate portfolio that they can be a part of, right? So it's sort of like crowdfunding, for lack of a better term, crowdfunding. But I like to call it pooling investors' money together to buy real estate. So we create this fund, and then we go around the country and we buy residential real estate properties in great locations where people have a desire to live, right? We put those properties in that fund. Those properties, since they're in locations where people desire to live, we're going to collect rental income. We're going to pay our expenses, and then we plan on having profit. And what the plan is we'll take that profit through dividends and share it with our investors, right? And then we'll hold those properties 3 to 5 years and get some really nice capital appreciation on those properties. The locations that I'm looking at, 7 to 10% appreciation per year, compounded. So if we hold them 5 years and we get 8%, that's a 40% appreciation compounded over a 5-year hold period. Let's say we got a $50 million portfolio, and the $50 million portfolio appreciates 40% over 5 years. Again, guys, you ain't got to be a PhD in mathematics to figure that out. That's about a 20, yeah, that's a good size That's a good size. That's like a 20%. That's like a $20 million increase in the portfolio. So that's the concept that I'm working on, right? I'm in the early stages of putting it together. But that's it. That's the concept. Pretty simple. It's no smoke and mirrors, no hocus pocus, no, oh, we're going to get 100%. No, none of that. Our goal is to target properties that give us a 15 to 30% cash on cash return annually. That's the goal. We want to target properties that give us a 15 to 30% cash on cash return. We want to target properties that give us a 7 to 10% appreciation every year on the property. That's what we want to do. And guess what? I know markets that are doing that. One of them is Boulder, Colorado. I believe they're also doing it here in Southwest Florida where I live. So I've expanded the real estate fund. For now, we'll be purchasing properties in South Florida, and we'll be purchasing in Boulder, Colorado, in that Boulder, Colorado area. Those are the two locations that will kick off the real estate fund. We'll be buying real estate in those two specific locations for right now. But the goal is to take the blueprint, right? Once we prove the concept, we'll prove the concept in South Florida and in Boulder, Colorado. We'll prove the concept there. And then we'll take the blueprint. Once we prove the concept, we'll open back up the real estate fund for additional investment. And then we'll keep expanding into other areas that give us the ability to make money. The whole goal of the real estate fund, guys, is to make money. That's it. It's to make money. I'm not going to apologize for that. The good news is you have an opportunity at some point, if you'd like, to be a part of that. And you don't have to, but you can. If you want to be a part of that, like I said, send me an email. Email address down in the description box. Send me an email and let me know you got some interest. I'll have your email address and I'll have your name. I'll put you on the interest list. So once I get the fund formed, Prime Real Estate Fund. What do y'all think about that name? Prime Real Estate Fund. I think it's awesome. I love it. Also, what I'm going to be looking for is a logo. So anybody tapped in to this video that sees it, send me an email or a DM on Instagram at RichardFain28. What do you think? Send me some suggestions for the Prime Real Estate Fund logo. Because I got to get the logo so I can start getting everything. And I'm thinking about it. I want some help from you guys, though. So anybody that sees this, that has a background in creating logos, send me some mock-ups. Send them to me at my email address, RF Financial Consulting, which is down in the description box, or send it to me on Instagram at RichardFain28. Let me know what you come up with from a logo standpoint. We need that logo. We need a powerful, colorful logo, guys. I'm excited, as you can tell. So a lot of people might say, well, golly, the world's coming to an end financially and you're ready to trying to start a real estate fund. I keep telling y'all, guys. I don't know how many times I got to tell you this. The best time to buy investments is when they discount it. This is the best time. So I hope the real estate market tanks. I hope it does. I hope we get some type of decline in value in the real estate market, because that's going to be prime real estate fund territory, because I'm going to gobble up as many of those properties as I can through the fund. I want to get blue chip properties that people just want to get out of. And I can grab them, throw tenants in them, and then what? Because see, the money, in my opinion, guys, this is just my opinion. The money that's made in real estate is really from the appreciation of the property. That's my opinion. The cash flow is great. Now, if you got 1,000 units, 2,000 units, 3,000 units, the cash flow is tremendous. But on the size of portfolio we're going to have, 20 to 50 mil, it's the capital appreciation where you make your money at, right? It's that property increasing in value every year, and you hold it for 5 years and then you exit it, or you turn it over and buy more, right? So that's where I'm trying to figure out, because it's only going to be like a 20 to $50 million real estate portfolio, right? We're not going to be 300 million, not at first. Now, if it grows to that, great. But that's not my goal. My goal is to be between 20 and 50 million in real estate assets in the fund. And the goal is to get you a turn of 7 to 10% every year, right? We want to increase the value every year. So that's really the goal. So that's where we're at, guys, with the real estate fund. Like I said, if you're interested, send me an email, send me a DM, let me know your interest level. I'll put you on the list. And as we get further down the road towards the end of the year, I'll be following up with more information, more data. And like I said, once we get this thing funded, we'll get out the offering documents so that you can see exactly what's entailed, and then you can make a decision from there. Well, thank you guys for stopping by the live. I really appreciate you. Do me a big favor. Before you tap out of here, please hit the thumbs up button for me. Hit that thumbs up button so we can get more likes on this video, so that we can get YouTube to share this content with more people. Do me that big favor. I really would appreciate it. You guys have been so wonderful and so good to me over these last almost 4 years, man, since I went to doing this full time. January 2020, I went into doing YouTube full time, and it's almost the 4-year anniversary. We got about 3 months and we'll be 4-year anniversary. And you guys have really changed the game for me. You changed my life. And I want to say thank you. I want to say thank you for all you guys who tap in, watch the videos, for all you folks that have subscribed to the channel, for all you folks have come over to the Instagram page and followed and continue to support me over there. I appreciate you, man. Without you guys, I don't get this platform. Without you guys, I'm not living my dream. I'm not in my passion. I'm not in my purpose without you guys. So I'm going to do everything in my ability to keep it 100 with you. I'm going to give you my wins. I'm going to give you my losses, just like I do. Y'all know that. I give you my wins. I give you my losses. That's how I am. Nothing fancy. No bells and whistles. Just straight talk from a guy that's done it for 25 years. And again, I'm no expert. I'm not your financial advisor, nor am I trying to be. I'm not knocking financial advisors. I'm just telling you, if you want to take control of your own financial life, there's a path to do that, because I did it. And I'm no smarter than any of you guys. I just decided what was important to me. And I decided I was willing to pay the financial price to get it. And if you're willing to do that, there's no stopping you. But you have to be willing to pay the financial price. You have to be willing to sit down and figure out what's important to you in this financial life. You have to sit down and figure out what you're trying to accomplish for any of this to make sense. You got to do that. That's the basic stuff you got to do. Once you do that, then all you got to do is take action. Take action. You don't got to be an expert. Just take action. Just think, if I'm going to buy investments, I'm going to buy the very best investments that are out there with a proven historical track record of making money. Keep that in mind, guys. I don't think you go wrong. Selling everything right now is not an option for me. I'm going to double down. But that's just me. You don't have to do that. You make the decision for you and your family what you need to do. But for me and my family, I look at this as an opportunity to build more wealth. And I'm going to continue doing it until we get into our next bull market. Once we get into our next bull market and I hit the numbers that I've set for myself to hit from a net worth standpoint, then I will start taking my foot off the investment pedal in paper assets and start cutting back, because I will have hit my wealth numbers. I have not hit them yet. So I'm still full steam ahead. Remember what Warren Buffett said: be fearful when people are greedy. Be greedy when people are fearful. Hit that thumbs up, guys, before you get out of here. Make sure you share this video. Share it with somebody in your network. Do me that favor. Share it. Hit that thumbs up and share it. If you're stopping by the channel before I even get to my exit, remember that Webull offer is down in the description box. Webull's going to give you up to 12 free stocks. When you open a new Webull brokerage account, put any amount of money in that account, they're going to give you up to 12 free stocks. That offer is down in the description box, guys. If you want to join Webull, use the platform that I use every day, go down to the description box, hit that link, sign up, and then put some money in the account. Send me a DM on Instagram that you signed up and funded it, and I'm going to send you a tutorial video to walk you through how to use that app to start buying your favorite ETFs, your favorite individual stocks. Now we can do the outro. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you guys on the next video. Peace.